Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn and Associates with your metals market update for this weekend of March 31st, 2017, about 2 p.m. Central Daylight Time. Now remember, on the weekend review, I look at the weekly charts, not the daily. I also want you to take a moment and understand, I'm going to show you my charting course again, features about it. The best investment you can do is you. And I can teach you these techniques that we're going to discuss, and you can master them in just a couple of weeks. Yes, you will get an understanding. Obviously, as time goes on, you become much more familiar. You learn the little ins and outs. But try to imagine, it's like me sitting at your shoulder watching you do each individual step, and that's what this is about. So in the metal market, it's a fascinating market right now because the market has been stuck on the monthly charts right here against the 18-month moving average of closes. Now, should this market clear 1263.10, we're not that far away from it. We're at 1248.30 on the monthly chart. It would then project up to the 100-week moving the 100-month moving average of closes at 1308.40. So just gives you an idea what can happen there. Close back under 1219.10, the chart's going to look bearish. The market right here, because prices are over the 18-month moving average, has an upside bias. The swing line is down, so the two fight each other. You have nothing. And look at how the momentum on the monthly chart is pretty flat, not pointing up or down. When it was pointing up back here, look at how prices carried with it. So very interesting chart. When we go to the weekly chart, it gets even more fun because on this chart, you get closer to the market action, if you will. So on this particular chart, 1263.10 is still the key, just like we said. The market is still looking here as to what's going on in the current contract. And it's going to always look at the April right now because that's the nearby contract, even though I already have my clients trading in the June contract. If you trade the April, you can get delivery. Remember that right away next week, so be careful. In the area chart of weekly closes, you've had this thrust go from 1126.50 to 1256.90, a small break that didn't carry on their prior break, and you've been trying to rally back up. When we take a look at the swing line here too on the weekly chart, not a trend. You got a lower low and a higher high. It can't set an uptrend with this action yet. Even if you got over 1264.90, you don't get away from the fact that you got the lower low. When we take a look at moving averages, it'll be interesting to see Sunday night's print because what will happen is on the weekly chart, this number is going to jump up. Now you're going to say, how do I know it's going to jump up? Because you're going to lose a value here and replace it with a value there. So it's going to get a bit of a jump. If we count back 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13, 14. You're going to lose one of these numbers right in here and replace it with a higher value. So it's going to make it jump upward. That's the key. You're not back here. You're down at this. One of those numbers is going to drop away. When I look at the Bollinger Band, I can make a strong argument that resistance is at 1278. Okay. So that looks to me okay. When I look at the momentum, it is still pointing up. So momentum is still moving. Admittedly, it's overbought, but charts like this can get overbought and stay that way for a while or oversold and stay for it a while. It is a sign that unless it were to embed, which means, and I don't even have one here, the prices were going sideways over 80 for a couple of weeks, that would be the important part, but you're not there. So I'm looking for 1278 to be something of an important resistance zone on the longer term chart. On the ETF of GLD, well, same type of thing. You're overbought. Market held these key averages. All it's going to take is 80 cents to get back up and over the 100-week. I don't know if it can do that. You know, when I look back here, you're going to drop one of these weeks, admittedly, and it's going to go up. Can it jump 80 cents is all that I can't figure out just yet. In the gold ETF, all you did is pull back, challenge the 18-week moving average of closes. This chart can get bullish like this if it takes out 2356. That's the number. If it did that, you'd have higher lows, higher highs over the 18-week moving average of closes, and I'd be looking for the upper Bollinger Band. On the silver weekly chart, what the market's running to first on the daily is the 200-day moving average of closes, which is a monster moving average. People really look at it. Now, it's over it. If it can start staying over it, people are going to say silver has made a very serious long-term bottom. We'll see if that's the case. The weekly chart's a little different story. It's telling you you're getting back into an area where you corrected last time from, so we're getting into overbought area. The resistance between right here, the next stopping spots, 1864.60, and on the previous rally, it couldn't get there. In fact, the last time it hit a higher Bollinger Band on a weekly chart was last summer. So it gets very interesting to see how that all worked out, and therefore you pull in your numbers, adjust a little bit if one is looking to come out there. The copper market had a fascinating week because the chart is bullish now. You got higher lows, higher highs, you're over the 18-week average, and the fundamentals turned somewhat bearish because the Escondida mine and the Grasberg mine, they're both back into operation. That was 10% of the world production of copper, and both mines are now, from the looks of it, going to be going. Escondida is going. The Grasberg mine, it looks to me, what I read yesterday, and I didn't keep up with it today, was that the Indonesian government and Freeport Mining, who owns that, apparently they've come together, I believe, and they're going to get a 6-month extension so that they can export the copper. What the government wants to do is tax them heavier, put local ownership into the mine, and there's a long-term contract, so why would Freeport do it? So we'll see how this all works out. When you look at the palladium market, you've got lower highs, lower lows. That is bearish. Resistance very clear between the 18-week and the 100-week moving average of closes. If the market can clear 932.90, might be headed to 888.10, which is completely different than the palladium market. That was platinum. I hope I said that right. This is the palladium market. And you've got a market that went up, challenged the upper Bollinger Band, stalling, getting an embedded reading, trying to develop that. It's a bullish chart. So the chart spread has been long palladium, short platinum. On the dollar index, you had a big break into the lower Bollinger Band and bang, turned right away from it. Look for resistance at 101.14.5 if it can get there. Momentum got oversold and it's starting to bounce back to the upside. So you put that all together, you have some fun with ideas about the trading and where the market is. Now let me explain to you how I teach. You're looking at PowerPoint. I start with PowerPoints so that I teach you the concept. Let's assume it's Bollinger Bands or swing lines or moving averages. Then I walk you, once I explain how they work there, into a real chart. I'm going to teach you to take the name and everything off the chart. Why? I don't want your brain saying, oh, Ira's doing this in gold, for example. I'm bullish gold. Immediately, you're swayed. Get away from that. Learn the patterns in the market. To go with it, in the mornings at 8:30, I record a video for you. It goes through 40 charts with today's action. So my videos, and there's 54 of them with the course, 54, each about 8 minutes long on average. And what they do is you see what I do, you do the same thing on the data, and you're going to get the data that's in the charting software to match up exactly with what I did at the end of last year. I think I did this in last year's quarter. So the data's not that old, but it's right there. We know it's old data. We want you to do that. Then in the mornings, when you come in, you're going to see, oh, Ira's talking about Bollinger Bands. I know what that is, and you're watching those. You can always call and ask a question as well. Be happy to answer it, or my staff will answer it for you. And then about every 6 to 8 weeks, we try to hold a live webinar for you so you can come in and ask questions. Now, included in the 54 chapters, what you get is typically the charting software, $100 value. You typically are going to get access to my research, a $60 value. That's $160 by itself. The complete course, there is no shipping or handling because it's online for you, is $89.95. And if you use the coupon code IRA15, IRA15, just no spaces in there, you get $15 off. So the whole thing, $74.95. Come on, it's a little more than a penny and a half in grain trading. In the metals, it's a joke. If you're trading the mini size gold, it's 2 cents, 2 points. You know, no big deal there, right? So invest in yourself. That's IRA 15. How do you get all this? Well, it's pretty simple. If you click up here, if you're watching me on YouTube, you're going to see an icon. Click on that. It'll take you right to the page that you can ask questions of. It's got the FAQs on there. It's got a small video, everything you need through that. To get it the other way, you just call us if you want, 866-973-2077. If it's the weekend, leave your name and number. We'll call you back. It's not a problem. You can also go to our website and under the word education, drop right on there. You'll see the facts page, how we answer your questions, what it's all about. Take advantage. This discount price is not going to last. And when it's over, I raise the price of the course again. This course started off $69.95 in December. I'm up to $89.95 retail, and it's going to keep going. It will cross the $100 mark as well. I used to sell courses similar years ago for $500. Think of how inexpensive I've made this. Have a great weekend. I'll talk to you on Monday.